Welcome back, students, to our next chapter, which is chapter number 9. This chapter talks about depreciation and corporate taxes. Now, there is an opening story given in this chapter about, especially for an airline industry, right? There is a conveyor belt, the baggage handling system installed by Delta Airlines, or you can say a Saudi airline, right? Now, if you read this example here, they say that in order to take care of the baggage and to reduce the cost, Delta Air has installed a baggage handling system at $100 million cost, right? And of course, this $100 million investment, it affects the financial position of the airline, right? Now, what do we mean by this $100 million, the cost of this system, right? Because this system will provide a benefit which may extend over the longer period of time. So if we have to calculate a depreciation of this baggage handling system, right? Because you can see here that this baggage handling system, it will wear out over the time, right? And the benefit of this system extend over many times, right? Now, because of this, we want to see, for example, this baggage system cost us $100 million. So I need to add 2. So this is the cost of this system is $100 million. Now remember, when are we installing this one? Let's say we are installing it now in year 0, but the benefit may come in future period, right? And remember that when we prepare our income statement, which is the effect of our economic decisions will appear on our basic financial statement. One of the basic financial statement is income statement, and we know how to prepare income statement. It has sales minus cost of goods sold, right? This will give us a gross profit. Then we have some other operating expenses, right? For example, operating expenses, what are those operating expenses? It could be let's say salaries expense, right? Insurance expense, rent expense, right? And so on. Or we have another term, we call it depreciation expense, right? And we may have so many other different expenses, right? So let's say whatever the number you put here, we have sales minus cost of goods, gross profit minus this depreciation expense, and so on, and then at the end you have our net profit, right? This is, let's say, for 2020. Similarly, we complete it in 2000. We have to complete the same for 2021, 22, and so on, like what we did in chapter 2. Now, this is the cost. Remember, we are spending $100 million. Now, this cost, which is an important part of acquiring this asset. Remember, this depreciation is for this one baggage handling system. This is the cost of our baggage handling system. right? Now, how we are going to consider this cost? Now, this baggage handling system, let's say we are going to use it for let's say 20 years, right? So life of this is 20, right? Right. So now the question is here. Yes. Now this cost, remember this one is our asset. We call it fixed asset, just like fixed asset. Our baggage handling system, which is a fixed asset, it cost us $100 million. Now how this cost should be reported in financial statements, right? Now this is what we are going to discuss in this chapter. Now if you remember the balance sheet, one of the item in balance sheet is, if you're talking about a balance sheet, in balance sheet we have current assets. In current assets we may have cash, account receivable, inventory, those so many other current assets. Then also we have fixed assets, right? Those assets whose life is long, right? And the benefits may come in more than a year. This is what we call it fixed asset. And one of the fixed asset is this one, right? This one, which is our baggage handling system, equipment, whatever the name you give it, right? Now how it will be reported in balance sheet as well as in the income statement. Let's say this is when we acquire this one. Let's say we acquire it in 2020 on January 1, in the beginning of a year, and now at the end of year, December 31, right, we prepare our financial statements end of a year. Now this is the cost. Remember, the amount of money we spend is this one, $100 million. Why I'm giving you this example? It's very important to understand how we treat this cost, right? Because this is an important element in understanding depreciation. Now, what will happen to the depreciation? How much will be here? How much will appear in our fixed assets, right? Because this is a fixed asset, right? Now, how much we have in fixed assets? This much, right? This is cost, right? The fixed asset at cost of fixed asset, right, which is 100 million. Okay. But when was this cost? On January 1. Now we are on December 31, right, 2020. Now end of a year. Now end of year, what happened? Yes. Now of course this asset has been used, so there is a wear and tear, right? Remember this baggage handling system in this example in our book, right? When we purchased this baggage handling system, it cost us $100 million in the beginning of year. Now at the end of a year, we need to put it in our financial statements. Now what is the value of these assets? How much has been used? What is the value of this asset which has decreased, right? Or how much has been depreciated, right? So how much is depreciated? So first of all, we need to know what is the method of depreciation. Let's say we're using a straight line method of depreciation, right? So we call it straight line method. So now the depreciation for 1 year, right, annual depreciation will be, right. So annual depreciation, if you have to calculate, it will be cost of the asset divided by its useful life, which is 20, right? Now this is the depreciation of 1 year, annual depreciation, right? So which means that 5, and if you continue it, right, by 20 years, you will recover your whole cost, right? Okay. Now, how we are going to do it? This is again very important, this example, to understand the whole chapter. That's why I am putting this example, right? Now, how much is the depreciation expense for 1 year? Remember how this cost will be put into our financial statement. We cannot put 100 million here because we did not use it only for 1 year. We are going to use this system for next 20 years. So how much the benefit we get out of this system during 1 year, which is our annual depreciation expense, this one, right? So this is the depreciation expense which will come in income statement. Okay. Now when you show this system here, the baggage handling system in your balance sheet fixed as a fixed asset, right? We acquired at a cost, but we know that how much has been depreciated so far. What is the total depreciation? It is for 1 year, the depreciation is this one, right? Now basically value of our asset after 1 year is cost minus its total depreciation so far, which is in this case 100 million minus 5 million is 95 million. So now you understand the linkage. Depreciation expense for this year is this one. We cannot put this 100 million here, the whole cost. Imagine what will happen to a profit, right? This is one of the expense items. Your income will go down abruptly, right? Too much down if you put 100 million. We cannot put 100 million here because you are going to use this baggage handling system or fixed asset for next 20 years. So what we will do is we will divide its cost by 20 years and we depreciate that one by every year. Every year it's going to reduce by 5 million. So this is a depreciation expense for each year. Okay. So then you can calculate, whatever number you have here, sales minus cost of goods sold, gross profit minus this depreciation expense minus whatever you will have your net profit. And this is how you will show it in the balance sheet, right? Fixed asset at a cost minus, this is how we say it, less, the name is accumulated depreciation. Right. So this is how it appears in our financial statements. 2. Depreciation expense as an income statement for 1 year, and here anyone can see, remember the purpose is to give information to users that this baggage system was purchased at this cost. So far this has been depreciated, means it has been used. Now as of today this is the value. Okay, so this is how we calculate and show the depreciation. This is very important. Now let's say we continue, and if we have to prepare the same thing for, let's say this is 2020, but if I have to do it for 2021, same thing on December 31 on this year, right? So what will be my depreciation expense? It is same. It will be this one because it's a fixed one, 5 million. And then you can calculate your profit, sales minus cost of goods sold, whatever, minus this one item. I'm just giving you here the example, right? So you will have net profit for 21. Similarly, you continue. Anyhow, now can you tell me how much, if I have to prepare 2 years, how much is the total depreciation now in 2 years? In 21, it is depreciated by this one, 21. So total depreciation is 10 million, right? So what is our total depreciation here? Let's say if you have to prepare a balance sheet for, I'll just change only this one here. Let's say what is after 2 years, if you have to prepare your balance sheet, it will look like this one, 100 minus what is the total depreciation now, equal to, right, this and this, these two depreciation, right? So see, now by 2021, after 2 years, at the end of 2 years, you can see, okay, value of my conveyor belt or that fixed asset is, I purchased it at 100 minus 10 means for last 2 years the total depreciation is 90 million. Okay, now this one, this is what we call it a book value, right? This is the book value of this asset, means in our accounting book this is the value. Okay, now say we'll continue with this example. Let's say after 2 years, this Delta airline, in our example, they receive an offer from Saudi Airlines that they want to purchase this conveyor belt system, right? So what should be the price? At which price they should sell? They should see, this is the book value. If they sell more than this, right, you know, this is the value actually. If you sell more than this, right, let's say you have two options, maybe you negotiate, right? So we'll say, okay, we can sell this one at either, let's say 80 million, right? Let's say Saudi give them the offer of 80 million, right? And Fly Nas give them an offer of, let's say 95 million. Right. So now this is, you can see, this is what they have received it. So what do you think? Which one we should sell it? This is an offer from Saudi, and this one is an offer from, let's say, Fly Nas, right? And this is the value, this is the book value. So of course we will sell it at this one, right? Why? Because this gives us a profit, right? If you sell it at 95, you make a profit, right? Basically, if you understand, this is very important, if your book value, and this is the market value, remember, this is what someone in the market is willing to give you, right? So this is a market value, right? Either you receive this one or this one. I'm just putting, this is also a market value. So market value can be, this is our book value. Now book value, this market value could be more than book value or could be less than book value. If this is the case, right, it means there is a loss, right? And if you sell it at this price, it means you know the value was 90 million, but you sold it to Fly Nas for 95 million, means you made a profit, right? Or we call it gain, fayda, right? Loss is khasara. So you either make a loss or you make a gain on disposal of fixed asset. This is our fixed asset, remember, right? Okay. So now if I want to put it, it should be like this one. I'll just put it here. Cost of any asset, right? There is annual depreciation, and I'm just creating, right, or depreciation expense, or you may have total or accumulated depreciation, right? and book value. And here let's say we have our year 0 today, which is at a present value, right? And after 1 year, at the end of 1 year, right, in 2020, or sorry, I'll just say it, year 1, 2, and let's say this asset we are going to use it for 20 years. Right. See, now what is the cost of this asset? It was this one, right, which is sorry, I'll say Control C, I'll use it as yes. Now what is the annual depreciation? We already calculated, it is this one. Okay, I'll explain. Now for year 0 means right now, just now we purchased, so there is no depreciation in year 0, right? And what is the total depreciation is also 0, nothing, right? So what is the book value of this asset as of today? Alhen, it is same amount, right? Now next, at the end of year 1, just like this one, this is end of our year 1, right? Now end of year 1, which is 2020, end of year 1, which is this year. So what is the depreciation expense? It is 5 million. This is how we calculated. What is our total depreciation at the 1 year? Only 1 year passed so far, so it is same amount, right? Right. Now what is the book value? Book value is basically how much you are left, this one. Cost minus total depreciation or accumulated depreciation. So what was the cost? In this case, this is the cost, right? Minus accumulated depreciation. This one. So it's same, like 95 million in after year 1. So year 2, what is the depreciation? It is same amount, right? Depreciation is same. What is the total depreciation or accumulated depreciation? Basically accumulate depreciation for these 2 years, right? For year 1 and year 2, which is this plus, so 10 million. Now what is the book value? Book value is cost minus total or accumulated depreciation, 90 million. Similarly for third year, annual depreciation is same. Total depreciation is total of these 3, right? Which is this plus second year plus third year, so 15 million. What is the book value? Which is cost minus total depreciation, this one. So let's say if you have to prepare 2022 balance sheet, you will show it here 100 million minus 15, you get 85. And similarly you continue until you receive in the last year, you will see here 0, you continue, so your book value is 20. In year 20 is 0, means you completely depreciated, means you completely use this system. Now what is important is that in the meantime, you receive an offer anytime. Let's say in year 2 you receive an offer, right? If you sell it at more than book value, right, you make, this one is a case, if you sell it more than the book value, let's say in that year, right, it is a gain, and if you sell it less than a book value, it is a loss. So this is the reason you need to understand the concept of book value and depreciation. Why? Because in decision making, in certain point of time, you have to replace an asset, right? Could be many reasons. Maybe technology is obsolete, or you receive a good offer from someone and you can replace it. So could be any reason. So you'll be involved in making decisions as an engineer, right? You'll be involved in making decisions about those machines or equipments, right? Like CNC machines, lathe machines. So these concepts are very important. So I will summarize. You should know how to calculate a depreciation, annual depreciation, right? How we calculated this one? Cost, right, divided by 20 years was the life. This one we used in this example a straight line method. We'll discuss later on. We have some other methods as well. This is our depreciation for each year, which will go to our income statement every year, right? And the total or accumulated depreciation will be the part of a balance sheet, so that anyone can see that after 2 years value of this fixed asset is 90 million. After 3 years it is 85 million, right? And so on and so forth. So you can check and complete it. So this is a very important concept of depreciation in chapter number 9, which is what we are going to start now. That was just a formal introduction about what is depreciation, right? So now if you know that a depreciation is basically what we call it, loss of value for a fixed asset, right? This is an example how we calculate it. This is an example of a car which we all familiar, right? That you purchased a car worth $25,000 at the beginning year of 25. So this is the market value, but you can compare it. It's that when it was new, it was 25. Next year, it is, you can go and sell for 19,000. So there is a loss in value, right, of 6,000. This is what we call it a depreciation. Why a car depreciate? We all know, because time has passed, right? Because of its usage, right? So could be anything for any asset, right? A depreciation. So depreciation can be of two types, which is we call them economic depreciation, right, and accounting depreciation. The example which I have shown you, right, on my Excel sheet was for this one. Economic depreciation is very simple, right? What I have shown you here in this one, this is what we call it economic depreciation, right? What is economic depreciation? It is purchase price minus market value, right? So purchase price, let's say, minus, this is purchase price. This is, let's say, in year 2019, 25 minus 12,000 is, how much is depreciated, right? 25 minus 12 is 13. So depreciation for so far, the total depreciation from beginning till 2019, from 15 to 19, the depreciation is, let's say, up to this is 13,000, right? So this is a very simple economic depreciation. We call it purchase price minus market value. And accounting depreciation is which is based on accounting concept, and this is what we'll be using in decision making, right? It is based on matching concept where we match revenue with expenses. Like basically we prepare an income statement, right? You have seen that our depreciation will be shown in balance sheet as well as in income statement, right? So fraction of that cost of asset is chargeable as an expense in each accounting period, right? So what is that fraction? If you remember this one, this is a fraction, right? What is this one? It is basically 1 over 20, right? 1 over 20, right? And, right. This is basically 1 over 20 because 20 is multiply by this cost, right? It's the same thing. 1 over 20 multiply by 100 million cost, or 5 million divided by this. It's the same thing. So what is that fraction? 1 over 20 is the fraction. This is what they are saying here in this, right? This is what we have done, right? It is based on matching concept. Fraction of the cost of asset is chargeable as an expense in each of the accounting period. Now, exercise 9.1, which is about economic depreciation, on page number 506. I'll show you. If I can open a book and we can go to page number 506, right? The first question. A machine is now, I hope it's clear to you. Yes. A machine now is in use which was purchased 4 years ago at a cost of 30,000. It has a book value of 9,369. It can be sold for 12,000, but it could be used for 3 more years, at the end of which time it would have no salvage value. What is the current amount of economic depreciation for this asset? Now, in order to understand this one, you should know what is the concept of economic depreciation, right? Which is purchase price minus market value. So we go back and see what is the information given. Purchase price. It is very simple. What is the purchase price of this machine? So basically this machine was purchased at a cost of 30,000. So you need to understand, right? So it was purchased 4 years ago at a cost of 30,000. It has a book value of 9,369, right? So what do we mean by this one? That book value of 9,369 means this number, right? So means that it was purchased at a cost of some numbers, which is for this example, right? Minus depreciation, and this one is given. Basically what is given is this book value is given in this question. What is the book value? 9,369 at a cost of this one. We don't know what is the depreciation in this one, how much it is depreciated, but we can calculate, right? If this is given, we can easily calculate this missing number, right? It's not required in this question, but just to show you, in our question here, cost is 30,000, right? And book value is 9,369. So this one here, can you tell me what is this number? Can you calculate? We can calculate, right? Which is the difference between this number and, so basically this is the total depreciation, right? And this is the book value. So now what you have now, the book value, the cost, and accumulated depreciation, right? It has a book value and it can be sold for 12,000. Now this is a book value, right? So it can be sold for how much? 12,000, right? So this is basically the market price. We can sell it for 12,000. So more than our book value. So it means if we sell it, let's say, then there will be a gain, right? I'm just explaining you some concepts. It's not required right now. Later on you will need these information. But anyhow, so what is given in this question 9.1? Cost, book value. From this one we can find total depreciation or accumulated depreciation, right? And this is the market value at which we can sell it, right? We can sell this machine for 12,000, right? So it means how much is the gain? Can you calculate what is the gain? If you sell something on this one, means there is a gain of 2,631. This is the gain you have if you sell it more than the book value. Let's see what is required in the question. See, there are so many information, but coming back into the question, what it says, what is the amount of economic depreciation? Solving is very easy. What we need to understand is what is the formula, right? This one, purchase price minus market value. Now if you know what is the purchase price and a market value, then it becomes very simple. At which, what was the wording could be different, right? So this was the purchase price because we purchased at this cost 30,000, right? And what is the market value? Is it this one or this one? Now we know it already, right? Market value is, this one was the this one 12,000 is the market value, and this one was the book value in this question, right? So this is the book value, this is the market value. So what we need is 30 minus 12,000 is the answer. Simple, right? 30,000 minus 12,000, 18,000. So this is what we call it, economic depreciation. I hope it's clear. Now next one is 9.2, right? This is also very similar to this one. I leave it for you to look at it and solve it, right? Okay, so this one is also, cost is there, and this is another depreciation method. We call it modified accelerated cost recovery system. This is just, we call it a method of depreciation calculation. I'll explain this one to you later on, right? But it's not important in this question because you have to calculate only economic depreciation. What is the amount of economic depreciation? Which is purchase price minus market value, which is already there from this question. So I'll leave it for you to figure it out on your own behalf. So I'm going to end my lecture here, and I'll leave it for you to solve it and practice, right? If you have any question, please feel free to send me an email, and then I'll continue later on with other slides. But very important, these are only 4 slides, but if you understand these concepts, the solving of the next questions and next parts are very easy. I hope it is clear. If you don't understand anything, send me a WhatsApp message or email. Thank you very much. Best of luck.